taking here. Today's September 6th, 2018, Thursday. I am actually recording this in the intraday of Thursday, so market should be open another hour and 20 minutes or so as I record this. I know today's Thursday, and I'm doing this video today instead of tomorrow because I am traveling early tomorrow, and this was kind of a spur of the moment kind of thing, so it was a last minute decision. And so I thought I'll put this out tonight since I'm not able to do it. Today we're looking at Spider, IWM, and XLF, and we'll call it a day. I did adjust my channel support or channel resistance here. Yesterday I tweeted out this chart right here. You can see that rising, pivot, new support type of thing. And I asked that, is that going to break higher or lower? Today we did break lower, but technically we're still kind of hanging around that vicinity though, as you can see there. But I think the better way to observe this in the more intermediate term perspective is drawing the channel this way. You can see that this acts as resistance there, acting as resistance here, and then acting as a resistance there. So you can just support, support, support. That's what we call rising channel. Rising channel support is not bad. It's just, the market is going to move in a more lethargic and methodical way that it's going to have a lot of these ups and downs as long as it's bound by this channel. We talked about in the last couple of weeks that once it break out of this channel, we'll probably get into a second gear. Until then, it's going to have its ups and downs here. But things been changing a little bit. We talked about how, we saw these down moves that took about a month to recover. This was about a month. This was about a month. But ever since we broke above this level, prior resistance, new support, you can see the downside move was resolved after about a 1 week of downturn. 20 MA is the level to keep an eye on. 20 MA active support here, August 15th and August 2nd. You see that rising 20 MA. We're currently in that vicinity right there. This gap was filled. You can see that. Something we've been talking about. We've been tracking gaps since early part of this year. Bears have no downside gap left because bulls already filled those. So bulls have a lot of gaps open. These gaps are great for intermediate term because when the gap gets filled, a lot of times the gap does act as support here. This is the reason why we're seeing that there's still a lot of dip buyers in that vicinity. So this gap has been filled, but that's okay. We got another gap that has been open since August 24th here. 20 MA is residing in that vicinity. You can even draw a support line like that. But regardless, I think this is a level to watch, 286, 285. We may or may not continue lower month Friday or early next week to retest the gap area or even fill this gap. But I think this is gonna act as pretty strong minor term support, right? Unless this market want to shake more people out by coming down here and then maybe retesting this island reversal gap. But I think the way it looks of it, I think we're going to find some support here, possibly kind of retesting this rising channel. I think that's kind of what I see early part of next week. But potentially a bull flag here. A lot of times, again, you don't want to be, so these flagging patterns, pennant patterns, these minor term continuation patterns not so reliable because they're really 50-50, but sometimes it plays out perfectly, sometimes it fails. So we'll see how that plays out. 286, 285 is the level to watch if we see continuing to the downside tomorrow and early next week. And we'll follow up and see next Friday if that 20 MA did act as support. If we do see continuation downside, next level support is about 284 here. But I do think that this vicinity going to act as support. We're probably going to see some minor term bounce in that vicinity. If not tomorrow, early next week. Russell 2000, I also have this channel drawn there. You can see that there. Again, rising channel is a great thing because that means we are rising higher. It's just bound by these channel. Only thing you want to be cautious about rising channel is that you don't want to be so precise with these lines because a lot of times when the market is in this channel, it could come down and break below it, kind of freak everybody out before going right back up. Or it could also do like, it looks like it's going to break out to the downside and comes right back in. That kind of shenanigan happens a lot when you're dealing with a channel like this. So keep that in mind. You should always use these lines as a reference point, but never like a precise level for entry and exits. If you've been following me long enough, you know that that kind of stuff is not going to work out. I think currently retesting this level here, 20 MA in that vicinity. I won't be surprised to see me coming down to retest that support before going higher, but sometimes, you know, if it might come lower, kind of shake a lot of people out before going higher. If this thing does come lower, maybe even 162-ish or somewhere in that vicinity, I think that's a good level to maybe even buy that dip. But obviously Russell 2000 in an option, higher highs, higher lows, and so I think that it's going to continue in that fashion. But in the minor term, we're kind of in a neutral phase there. Let's continue with the XLF, and we'll let you guys go. XLF. Good news about XLF is that we fill this gap. This is a downside selling pressure, right? That gap has been open for how long? About 4 or 5 months, and that's what made things really hectic for the bulls. Well, the bulls got up here and finally filled that gap, so there's no longer downside gap open. But bulls need to open some good size of upside gap, which is this one's actually open here. I didn't draw it in, but that's an upside gap there. There's a tiny gap there, so we got at least those two side gaps here. Potentially a bull pennant. I don't put too much trust in these minor term patterns. Sometimes it'll break higher, sometimes break lower, sometimes break higher and fall back in, sometimes break lower, go back up. Do not pay too much attention to these short term like pennant or flagging patterns. That's what newbies do. That's what newbies always retweet on Twitter and stock tweets. Look at these cheat sheets of these triangle patterns and cup and handle. And I think cup and handles are not really bad as long as you look at things in a more of an intermediate term perspective. Because what cup and handle really is just that this thing going up here and creating higher low. That's what cup and handle is. You can see that this was a cup and that's handle. Cup and handle. What that really is cultivating higher low there. So if you're looking at things more about intermediate to primary term perspective, even if you look at things, like a consolidation pattern, like a pennant or flagging pattern, much of a longer term, I think that is more constructive versus looking at things, more of a minor term pattern there. So currently 20 MA is rising here. 50 MA is also rising. Thing about it is the 100 SMA and 50 MA, we see that golden cross there. Because last time when we saw that dead cross right there, excuse me, things were pretty hectic, right? But XLF was building that base. We saw that head fake to the downside, trapping a lot of shorts and the longs because longs stops were taken out. And then we got back up here again. We got up here and filled that gap, pulling back. Let's see if we can hold it. I think we can continue higher. I won't be surprised to see XLF coming back down, maybe even retest at 27.91, maybe retest at 50 MA because 50 MA is in that vicinity. But if we can see certain little bit of a minor term movement, we may gap back up and continue, because XLF could do something like this where it just continue to do these little small up and down movement. That's kind of like XLF is really good at that. Like bank sector is really good at like making these tiny moves and going up and down here. So we'll see how that plays out. We'll go from there. Well, you guys enjoy your weekend, and I'll come back to you. We'll resume the market update next Friday. Good luck trading next week, guys.